When contractors come to me and they want to scale their business using systems, the first thing that I do is actually help them understand the risk that they're already taking and how to reduce that risk while scaling their business. It is one thing to just add more revenue to your business, but then you end up stretching yourself too thin, putting out fires all the time, and micromanaging everybody just to get those jobs done. However, when you reduce your risk through leveraging systems, you can actually scale your business while getting your life back and getting out of the day-to-day operations. In this video, I'm going to map it all out for you on the whiteboard so that way you can actually understand and see the numbers for yourself and understand how you can reduce your risk while scaling your business. If we haven't met yet, I'm Liz Chisholm and I help contractors just like yourself grow and scale their business and keep more of that profit in the process. If you could do me a huge favor and subscribe to this video so that way you can be notified every time I put out more videos to help you scale your business, that would be great. And give me a thumbs up so I know that this video was great and I can make more like it. So typically when businesses come to me, they are running at about a 30% gross profit margin. And so if they are at $1 million, we're just going to call this their annual revenue. So we're going to say $1 million and their average job is around $50,000. This could be for a builder, remodeler, something like that. They are actually using 70% of that 50,000 per job to get the job done. That's the cost of goods sold. And so what happens is that they really don't have a lot left to run their business and to grow their business. And so what happens is with the $50,000 per job and having $1 million business, you're doing about 20 jobs per year. Now, let's look at the risk for this. If our gross profit margins are only 30%, we actually only will have 15,000 left over for all of our overhead. This includes our salaries, our taxes, our marketing, our insurance, all of the things that it takes to run our business. This could even include leases on your vehicles. All of that overhead is going to have to come from just $15,000, which is really not a lot left over after the job to get your business to run and scale and grow. Typically, the profit is pretty non-existent here. I'm just going to put a question mark there because typically when people are coming to me and contractors are coming to me wanting systems in their business, this is very low. And so when we're thinking about the risk for this type of business and we want to scale it, we really don't want to scale this blueprint. We want to get a different blueprint. The risk for this is actually $35,000 because that's how much it's taking to get every single one of these jobs done. And it's probably taking a lot of extra time because we have to end up getting the cheaper sub and then they do the wrong thing and we've got to do read work. Or we didn't hire a project manager, so we're now trying to fit our project management time into this job as well as trying to run our business. And so the risk is very high in this category. So if we want to scale our business while reducing our risk, we actually need to have a different blueprint to then scale. And so this is going to be considered the low risk blueprint that we will then scale beyond $1 million. Now, let's say this is our annual budget and we do 20 jobs, but instead of, well, let's just say that each job is 50,000, but let's say that instead of our gross profit margins being 30%, let's actually move them up to 55%. So if we are actually getting 55% left over after every job, that means that we are only using 22,500 to complete the job. Now, we could do this through efficiencies. We could do this through price cutting. We could do this through a lot of different things. But for the sake of this exercise, I want to just look at apples for apples, and then we'll look at scaling the low risk blueprint. So if we have our gross profit margins at 55%, that actually gives us 27,500 left over for running our business. Now, if our overhead is 15,000 over here, and it's basically the same blueprint, we're just getting a different profit margin here. So really, minus 15,000 is going to equal $12,500. This can now become profit. So now our business is not only profitable, but look at this. The risk is lower. So instead of spending $35,000 per job to fulfill the job, we're now using less risk to fulfill the job. This is less money that we're having to manage and really put into place in order for us to get those 20 jobs. Now, on top of that, our time is probably going to be pretty equal to this amount. Now, as we scale, we want this time to also be lower and we want the time risk to go down. But this is the blueprint that it'll actually take to get our business to be low risk and to be able to scale. It has to come down to really understanding the risk factor and lowering this number or increasing this number. So lowering the amount it takes to fulfill a job and increasing the amount we make on each job in order for us to have a better blueprint to scale. Now let's go over here and see what it would look like if we were to create a low risk but scaling business. So let's just say that we're at that $1 million mark and we want to go beyond that, but we're just going to start with the $1 million. And let's say this is our budget for the whole year. If we are going to now charge more per job because you do the exact same types of jobs, we're just going to increase our profit margins to 55%. We're now increasing the average transaction value of each job to 62,500, which then gives us a 55% gross profit margin on here, which means that we only have to do 16 jobs a year to get to that $1 million mark. 16 jobs is low risk. Now, at that 55% gross profit margins, we now have $34,375 left over for running our business. Now, if we're going to be charging a little bit more, we probably are going to spoil our clients a little bit more. We probably have a little bit more marketing. We are not doing word of mouth and referral type business. We are actually going to find the people who are going to pay us this amount of money, and we are going to build the reputation and the network that's going to get us this pricing. But that's for another video. I just want to make this super simple for you. So let's say that we have our overhead at 15,000. Like I said, it's probably going to be a little bit more than this just because we are now running a more sophisticated business and we are getting more sophisticated buyers who are going to hire us for the type of work that we do and the quality that we provide. And so obviously this number may not be 100% accurate, but for the most part, it's going to get us pretty darn close, which means that we'll actually have left over after overhead, after running our business and having the cost of goods sold, we're going to have $19,375,000 left over after doing this type of job, which becomes pure profit. This is something that can scale. And when you can scale this model, you can now afford to hire more project managers. You can afford to hire a sales rep. You can afford to hire marketing. You can afford the systems and processes that will help automate certain things in your business because you now have the money left over for this. So when you have that amount of profit and you're not doing as many jobs, which means that your risk is going down even further, your profits going up, your gross margins up. This is all indicators of a low risk, high scaling business, which is the blueprint that you need for your construction business to scale. If this video was helpful for you, just give me a thumbs up and let me know in the comments what resonated with you. And I can help break this down even further and help you really understand what your numbers need to look like for your business to scale, and while at the same time reducing your risk in your business. And so that's how you can get your time back and get your life back while making more money.